I'm going to go ahead and start the recorder. I'm just going to quickly just kind of talk you through this. So QuickBooks would probably replace all those spreadsheets if you set it up correctly. And it would take a little bit of adjustment in terms of like you're in the routine of doing certain things. It's going to take a little bit to change your routine, but it could be a great tool. Like for me, it's been amazing how much time it saved me. I'll just quickly go through this and then we'll talk about the budget if that's okay.
Okay, that's fine.
So this is like a sample company and it gives you tips like if you wanted to set up your bill pay automatically.
Hold on, Nita. I'm seeing your I thought I was seeing your QuickBooks, but I'm seeing your file like you're searching.
Yeah.
There we go.
So now you see me.
I see you. Beautiful you. Okay, now I see QuickBooks.
So Craig's Design and Landscaping Services. And see, when you set up your company over here, which I won't go into the setup, but it'll ask you what industry you're in. So if you're in insurance or landscaping or retail or whatever, it will guess what your chart of accounts are. So the setup is fairly easy. The like on this home screen, on this dashboard screen, if you wanted to set up regular bill pay, like if you had regular monthly payments for rent or something like that, you can set those up or you don't have to. You can set up your invoice process, but if you don't invoice people, then you don't have to use that function. In the banking section, this is where I mostly deal with is I look at these two balances. I look at the bank balance, which in this sample company has a negative number, and in QuickBooks it has a positive number. So that's a huge difference between those two numbers. And the reason is that I've got some transactions down here that I haven't accepted. And also if like you have a business checking, business savings, and business MasterCard, you can sync all of those accounts separately into QuickBooks. And then there's a link somewhere, link account. So you put in your routing number, your account number and all that, your password. Every time you change your password, you'd have to update QuickBooks. And then you click update, which I won't do in this sample data, but if you click update, it takes it through whatever electronic data you have with the bank through that date. So it automatically syncs to whatever you have in the bank or on the credit card account whenever you, and it'll automatically update periodically or you can update manually. And then, so just going through a couple of example transactions. So this is like money received. So this is either money that I put in as the owner or it's income. And I just click on that space and I look to see what description came through my bank account, which doesn't tell me a whole lot. But as a business owner, I know this was money that Bessie, Books by Bessie, paid for services. So I just clicked it. This is your chart of accounts. This is where your income account, that's where this number will go. So see how this says services and then income. Okay. And then there's expense accounts, of course, there's owner contributions, owner distributions, and then I just click add. And so that goes away from this list. So what the process I use is I go through this list, I get the information as correct as possible. So like on this one, I could put in a rental. And it's going to let, if it doesn't find it, it's going to tell me to add it. And then it'll say add it as a customer, as an employee, as a vendor. I'm going to say customer, save it. And I'm also going to put that income in services. And then I'll add it. So once you kind of get in the routine of putting the payee amount in and whatever type of expense it is or income, and then it also says, you know, here's your expense column and here's money coming in, here's money going out. So you go through all these. In this case, you would not have any matches because this matches to an invoice that's out there. But
Okay.
you wouldn't have any of those if you don't book any invoices in QuickBooks. And you go through all these transactions. So in this sample account, there's roughly 25 transactions. You get rid of all these first, and then I reconcile these accounts, like this master, well, not necessarily the credit card account, but my main bank account. I want these numbers to be close to equal. So if I'm overdrawn in the bank, I should be showing overdrawn in QuickBooks. So that tells me something's not right. But you click on this gear to reconcile. And so it's going to say this has not been reconciled before. So let's get started. And so that reconcile in that gear right there are a lot of functions, but this would be reconciling your QuickBooks to your bank account. And you can do that periodically and save it, or you can do it monthly and save it. But until you get your bank information reconciled with QuickBooks information, your financial reports will not be good numbers. So that's
Okay.
part of my process too. And the other, let's see if I can, maybe later. Okay, then on the reports tab, once I add transactions and I reconcile to those accounts, every month I run a balance sheet and a profit and loss. And so the more activity you have, the more important it is to get all that information, that detailed information done first. And then you run the balance sheet, which shows cash balance in the bank. It'll show your credit card balance. If those balances are off, then you got to do something to fix it to where it matches your bank statement or your credit card statement. So there are some checks and balances to do. Most people rarely look at balance sheet. Let's see if it'll run a profit and loss. Your profit and loss, though, is normally used for taxes on a cash basis. So see, I can change these dates. And let's see here. So up here, I can run this by month. Right now, this is a total only, but I can run for January through March or whatever quarterly month. You know, I can do a quarterly from January through December. And then on a cash basis is normally how people file their taxes. So I'll run it on cash. And for you, it's probably not going to be that much of a difference, if any, because you're not going to be invoicing and you're not going to have money to come. It just comes into your account and you record it as cash received. But I'll run this report again. And see, it shows quarterly information for the P&L, which this has been very helpful to businesses where their numbers are up to date. And let's say they're applying for COVID-19 recovery money, you know, funds that they want to see. They want you to show how much income you had in 2019 versus 2020 for a certain period of time. You can run these reports and get all that information. So the profit and loss, income is the same as sales. And then here are your expenses. And all of this is driven by your chart of accounts. So whatever you want to see that you spend, you make sure that it's in the right category. And then this shows the net income. So in this sample, but again, these reports are they're not accurate yet because we haven't balanced those accounts yet.
Okay.
So you think about it and maybe ask Earl or somebody, another insurance professional, what they use for their ongoing accounting. You know, if there's certain, but don't get too carried away until, you know, let's say a year, because those QuickBooks, like you can do $12 a month for the simple start. And then if you decided you didn't want it, you could always cancel it. So it's like $12 a month is what I saw on special today online for QuickBooks Simple Start, and like $25 for the next level up, which is Plus, I think. The Plus allows you more users. So if you had somebody do some work for you from home even, and they would use their own sign-on, and you give them permission to update your book so they don't have to, unlike desktop, where it's on your hard drive, QuickBooks Online is in the cloud.
Okay, let me ask you this, Nita. And I hate to say this out loud, but it's you and me, but I haven't done a lot of my work because I've been tied up with other stuff. So I've just let it go, knowing I would have to catch it up at some point. Since I have so much to catch up on, would I be better off just doing the QuickBooks from one and go back and capture my 2019 numbers, which
Yeah, as long, there's some ways for you to sync old information into QuickBooks. One is you just do the sync, and there's certain amount, different banks have different information stored online. But there's also a way to import it from the bank. So I would try it, you know, for 12 bucks, I would just try it and see what you get. And then if you want to get back online, I can show you how you can set me up so I can see your numbers. And then,
you see, I changed bank in March, February or March. So I can't go back and capture that old information because that account closed. But I can capture my numbers for 2019 because I have those in a spreadsheet. So I can do a comparison. But technically, I didn't start the insurance business until September of 2019. And I didn't start seeing money until October of 2019. So 2020 is my first year formally at Eagle Hollow Enterprises.
Okay.
Because that didn't go into effect until February of 2020.
So for my own business, I do make journal entries. Like if I spend money on the business out of my personal account, and maybe it was before it downloaded to QuickBooks, if you go to Accountant Tools and Journal Entries, you can make entries for the month. I mean, you can make individual entries, but what I did was at the end of every month that I was missing data, I just made one entry. So like if I paid for my telephone and my Wi-Fi and my insurance, then I could make those 3 entries right here and charge it to owner contribution in a journal entry as of the end of whatever month it was.
Okay, that wouldn't be hard to do for my 2019 stuff because I already have it broken out by the different GL codes.
Yeah. Yeah, so just getting that journal entry information together, and then just putting those journal in and put the as of date. That'll help you catch up.
Okay, because that won't be hard because I've already got those totaled in a spreadsheet. My spreadsheet is like a journal entry, except it has all the different categories across. So when I put a number in on the first section, then I would go over and put the number in the right category too. So I could so it made it easier for my CPA.
Nice. Yeah, and so you can set up your chart of accounts similar to that.
Okay.
If it doesn't automatically set it up the way you want it, you can change that.
All right. Well, it might be worth to your advice. That's exactly why I asked you, because you're the expert. It might be just as easy to go ahead and do that since I'm so far behind anyway.
Yeah. Yeah. Particularly if you're far behind, it's going to help calculate that stuff a lot easier than doing it, you know, hand inputting it. into a spreadsheet. So, and then you'll be ready to go for next year too, and you'll have the full year's history where you can, that profit and loss, you can run for the same period the previous year. So you'll have 12 months of history or 18 months of history, however much, and you can run previous year comparisons.
Okay.
That I would at least give that a shot. And if it's just totally overwhelming, give me a call and we can kind of work through. It's really just a matter of getting comfortable with some of the, you know,
Okay.
some of the details of QuickBooks. But once you get on a roll, you're doing the same thing every month. So once you get on a roll for the type of business that you're in, the type of information you want to save, you'll be good. So this, I believe I had sent this to you before. I'm not sure if you were able.
Yeah.
So this is the spreadsheet that I recommend you use for budgeting. And the way it works, the yellow cells you could change. The other cells I recommend that you don't change, you don't input, because it calculates. Also, I've added some purple. So like right here, if I wanted to start the forecast December 1, 2020, I'll change that one date and it changes all my dates across.
Okay.
So we're gonna, for today's example, we're gonna go with the end of January 21. That would be the first month end. And we're gonna put, since you're online, do you want to talk about the insurance business? Or you want me to use another example?
Whatever you want to do is fine. I can adapt.
Well, let's talk about, let's just say a service business.
Okay. I know you're recording there, so if you want to make it general, I'm okay with that.
Let's make it a service business. And let's say in the service business, you have, let's say somebody pays you a monthly service fee, a monthly service. And they pay you, say, $100 a month. So in this column, this is my average ticket price. This is my average selling price. This is the name of the service. And I'm going to have, in January, I'm going to have 10 of these. By February, I'm going to have 12. By March, I'm going to have 15. And for today's example, I'm going to hide these other cells because we'll just do the next 90 days. So you see how it calculates 10 times 100, which is $1,000 for my monthly service fee. And let's say the next type of service might be books. And I'm going to charge $18 and I'm going to sell 25 books in January, 35 books in February, 45 books in March. Now for you, I was thinking, what would the main categories be for you? Would it be by carrier or would it be by type of insurance?
It would be by type, like for Medicare, I would put in how many I've sold and I could project, because it's going to be the same across, assuming everybody keeps paying their premium.
Mm-hmm.
And then it would be it would be the marketplace, and I can project an average of what that would be. And then it gets into the others, which is much harder to predict. Like the retirement plan and the cabs, how many of those I sell. It depends on how much they buy, the volume of the volume and the amount that they're willing to put in their premium each month would determine how much my commission is.
So in the beginning, what I recommend is that you pick 3 to 5 main revenue drivers. Try not to get too complicated, because if you're going to make, like in my case, I'm going to make most of my money from this monthly service fee. So I'm going to list that first. And then if I had books to sell, that might be a secondary stream of revenue. And then I might have workshops or other items that I sell, but I want to capture the primary revenue drivers in the first 3 to 5 lines. That would be important for you to do.
Okay.
The next, so this calculates, then you can note here, let's see, one service client is 1 hour at $100 or something like that. Whatever you want to remember in terms of the assumption for each of these. So I'm going to put in monthly service revenue. So these are sort of your footnotes, so you don't forget what you assumed. And then it calculates down here, so it takes volume times price equals your total cash in. So for my monthly services, I've got 1,000, 1,200, and 1,500 for the first 3 months. And then for books, I've got 450, 630, and 810. And if we plugged in some other revenue drivers, of course, it would calculate similarly. So right now I'm showing 5590 in the first 90 days. And the term revenue or income or sales, they're all the same. You know, they all mean the same in this discussion. And
Okay.
in QuickBooks, you'll see income as they never mention revenue or sales. They call it income. And then net income is your net profit or your net loss. All right, then this goes into, for every monthly service, if I wanted to pay myself or if I wanted to pay somebody else $50 for each service, this calculates your variable cost, what you call your variable cost. So in your case, if somebody paid the carrier $250 and then you get paid $150, then your cost would be $100. So if you wanted to forecast the amount the carrier gets, the amount that your customer pays, the amount that your carrier gets, and then the amount that you get, this is the place to do it. If you don't want to track that information because it's captured somewhere else and you just want to, up here, you would forecast Medicare premiums, $50, and then you've got 50 people at $50. If the net
I wouldn't do
premium,
that much.
okay. Well, I mean,
Do that much.
but you decide what information you want to track on this particular worksheet, because you could go, let's go back up here. So like for you, if you're Medicare, well, let's just Medicare premiums, your net, what do you want me to estimate for Medicare premiums? Net to you. What?
Okay, we can count on $20 per person, and let's just put 10 at the number I have to put in each month bucket.
Okay.
It's a little bit more than that, but I didn't get in close to my number for this year, but I didn't know what I realistically should need it.
Well, now you know more. You know more.
I'm better prepared for next year. That's for sure.
So see how if in this example, Medicare premiums net to owner is $20 per client. You've got 10 clients every month. So your net for the next 90 days for that particular revenue stream is $600. So what this tells you is how many more, this should be a tool to help you figure out, well, how many do I really need by June or October or December if you start off with quarterly goals and then unhide these cells to do the whole year.
Okay. Okay, because this is based on commission. It doesn't include the bonuses. I don't even know what that number looks like right now.
Would that be a year-end bonus or would that be a volume type bonus?
It would be a volume type bonus that's based on the end of what we did for this past quarter.
Okay. So maybe you play around with your numbers. If you want to get on the phone separately, we can do that and just estimate if you meet certain volumes, then we can factor in your bonuses and I can show you how to, like we would just have another line up here, bonus, and plug it in for June or whenever you meet that volume. And
Okay.
guess, you know, on the low end, probably.
Yeah, I'm sure I'll holler back at you once I get some numbers. I'm supposed to get paid that bonus sometime in next week or so.
Mhm.
I don't really know exactly how much it is because it's all driven by new business for each carrier. And in
Mhm.
some cases, I don't know if it was counted as new business or not because I changed the brokerage firm. So
Mhm.
some things are counted new for the brokerage firm, but it's not really new business to the carrier.
Okay. And
So
so you're just learning as you go too, you know,
exactly,
yeah.
exactly.
So next year, this tool would probably be more helpful because you'll have more information.
I'm excited to learn all this. It's challenging, but oh my goodness, I know I'm going to be better off if I can master it now.
Uh-huh. I, I, I think you'll feel better too. And at least what I use this spreadsheet to just refer back to, okay, what were my goals? Did I make them or break them? And how much did I exceed them? Then you know, have an extra cup of coffee or whatever. And if I don't make them, then what, try to figure out why I didn't make them.
I know
So,
I'm going to be upside down for quite this year until I can figure out what the magic kingdom is to grow the money faster.
yeah. So we've covered in each of the above cases. So I'll just say for every $18 book that I sell, it costs me $9. And for Medicare premiums, we've already projected that as net, so there are no additional cost. So these variable expenses really vary to sales. These costs are gonna grow as I add more sales. So you need to capture those costs per type of sale. Below the variable cost line are your fixed costs. So regardless of how much you sell, I'll use an example, you know, if it's 15 a month for hosting, if it's 35 a year that I have to pay, or let's see here, 35 I have to pay for business licenses in January. For Facebook ads, if I plan on running ads of $20 a month, that kind of thing. So it's going through your own expenses, which you've got some information there probably on your spreadsheet. You could load that in. If you have a one-time, like if you're gonna upgrade your website, add an additional, say by February, I'm gonna spend $750 to upgrade my website. If I was going to subscribe to the Simple Start QuickBooks, it would be $12 a month. If
Okay,
I,
most of my expenses are going to be fixed expenses because they're monthly recurring monthly of what I do, like Calendly and Zoom, and the flexible one is how much I pay Susan to work on my website for me.
okay,
So is that a variable or is that going to be a fixed expense too?
that would be fixed. But
Okay,
regardless of how much you have in sales, you're gonna spend it. Like insurance, anything you spend on insurance, wages, all of that's gonna be, unless it varies by sale, it's in fixed.
okay,
Now, let's just say that I know that my overall expenses are, I'm just gonna lump them up right now and say, I gotta cover $3,000 a month. Now what this, so I've added in a few up here, the one-time website, but roughly this is what my expenses are based on what this spreadsheet tells me so far. So 12,721 are my expenses. And so I'm short. The negative number means I'm out of money.
Right.
So that means I've either got to increase sales or I've got to, and see, I haven't really paid myself anything. So what I'm doing right now is playing around with the budget for myself. If I say I've got to have another $2,000 in draws a month, that tells me that I've got to increase my sales to cover 4,157 or borrow money, which I really don't want to do long term. I've got to turn this negative number to a positive number. Does that make sense?
Yeah, and
So,
that's exactly where I'm at. So
yeah. And so my process would be go back up to here and say, well, what can I do? I had thought about doing a conference. I might be able to bump this up to 50 books and then 100 books. I have to mentally say, is the monthly service reasonable, or can I bump that up, or how can I, how long is it going to take me to cover that negative number? So let's say if I had a conference and I charged $1,000 and I had 100 people attend the conference, I can look back down here. And of course, 100 people at the first conference for $1,000 a piece, that would be pretty awesome, but probably not reasonable. So let me go back up here and say 100. If I got 100 people at $100, that gets me closer. I'm only $2,000 short at this period. And what this also tells me is that I've got to borrow money temporarily or contribute it from savings. So let's go back up here. I was going to start the company with $1,000. So here's a cell right here where you can, I'm starting however much money you got in the bank, start here. And then loans, I'm going to say, I have room on my credit card for, well, here's my negative number right here. So I've got to borrow 3,500 in January to make those numbers work. And then 4,500. And see, these are now positive. So then I can, as I kind of get my ideas together, I can unhide these cells and look at April, May, June. And say, if this is a good base quarter for me, how is April, May, and June gonna change for me to cover so that I've got a positive number? I've got money left in the bank and I can pay my own bills. So
okay.
that's kind of a 90-day process. Take 3 months and 6 months and 9 months and then 12 months. And then that will be your annual, these totals will be your volume. And then your sales number right here. So that's what we would do individually. Janelle, let's go back through, take all this stuff out that doesn't make sense to you, and just assume how many Medicare premiums am I going to need at $20 a piece, and then how much are those bonuses? We could go ahead, we could say periodic bonuses, 1,000 a piece. Get one of those by March, that kind of thing.
Okay,
So it's making reasonable decisions based on what you know about your business. And then you've got a target. You can refer back to this and say, well, I didn't make my, if we change this, if the Medicare, if you get 15 or if you get 5, then you gotta figure out how to make some adjustments. And how long is it gonna take you to break even? So that's what this tool is. This number says recon and it is in pink. And so if these two numbers are not equal, then that means there's something wrong with the formulas. It's a math problem because a lot of times when you add rows or take rows out, sometimes the formulas get screwed up. So you'll just
dealt
have
with
to,
that before. I know how to fix.
okay. So just double check the pink, the numbers in the pink to make sure that they are adding the way they're supposed to be, equal where they're equal. So it looks like these are calculating correctly. This is calculating correctly. This section is arbitrary. I should probably put this in yellow because let's see here. Because you should change, like if you wanted to set goals for yourself, like number of prospect calls for January in order to turn 10 new Medicare clients, that kind of thing. If you had to call on 5 people to get 1 to buy. So those kind of metrics, you're probably starting to identify how much effort is it going to take for you to turn the sales. Another good metric to think about is, well, how many hours, if I have to get 100 new Medicare clients per month, is that reasonable for me? And how many hours in the day am I going to have to work to get that many? So that these are some more metrics that you just begin to fine tune the longer you're in business.
Okay.
Any questions?
No, I think I get it. I just gotta sit down and do the work. The challenge.
Well, and just,
Me and 10 of them things that I need to do.
I know, well, maybe just block off some time and spend it specifically on your numbers, on budgeting. Even if it's an hour, even if you cut yourself off and go, I can't spend any more time, I'll come back to this next Saturday, that kind of thing. Or
I'm gonna
tomorrow.
try to have it done this weekend. I'm pretty ambitious about that, but I gotta get it done because I've got other things I gotta do and I can't keep dragging it out.
Right. Let me exit this recording. Thanks.